Well, with all the results and company announcements that have been coming through, we haven't really paid much attention to last week's budget policy statements. I want to get into that a bit today. It forecast that the country should see economic growth bouncing to 5.7% this year from 5.2% last year, before accelerating to about 7% by 2013. What's your growth outlook? Are you in line with that kind of a bullish forecast that's out there?
But that 5.7 forecast, I think, is off the planet. I don't think there's any chance of that happening this year. I think we're going to be significantly below that number. There are way too many variables now on the pitch, starting off with the fact that, the rains really have to be optimal for us to get back to 5 to 5.5%. And I think we're entering a period, a run-up into the election. We've got the ICC hanging over us, all of which is puncturing the optimism we saw last year. On balance, I think 5% would be an outstanding result for the full year.
It's within that context that if we're looking at the other highlights, revenue collections increased, albeit missing government targets. Domestic borrowing was revised upwards to 125 billion shillings. But having said that, expenditure is also behind schedule. To what extent is this underspending triggering concern? Because it will then directly have an impact on that growth potential and that story moving forward.
Well, I think you're completely correct. We require sort of medium-term capital to really jumpstart the economy in order to accelerate it up to the levels that were outlined in that budget outline that you were talking about. But at the moment, we've been coming back to the bond market. I'm not so sure the bond market is going to have the capacity that it showed in the last 18 months. And I think, we've already seen a turn south in the shilling, although it's come back below the key 84 level. The stock market's been on a down move. We've got increased political risk. We've got some quite extraordinary comments coming out of some ministers about withdrawing from the ICC. And under those conditions, I think, we've got to tread very carefully going forward now. And I'm not so sure the appetite is going to be there for Kenyan risk at these sort of levels, and I think we're watching a slow repricing of that.
When it comes to spend, though, Aly Khan, what's the problem in actually getting, the pipeline flowing?
Well, I think, what we got to do is segregate where we want the big spend to happen. We want it to happen in the energy sector. We need to go and get extremely aggressive about bringing investors in on that. And I sense that at times we're going, it's sort of 1/4 of the way that we need to go. We have an enormous asset that we can unleash, particularly the energy sector, rails, wind power, all these places. But I think there's a sense of dysfunction right now at the government, and the government's got to decide where they want to allocate that cash and how they're going to attract it. And at the moment, we haven't come up with any real innovation and attractive type of vehicles for those big capex spends that we need now people to come and put their money on the table.
When it comes to infrastructure spend, what was highlighted was that physical infrastructure is spending on physical infrastructure is expected to rise 16%. Any market reaction to that figure by those operating in the construction space, the likes of Athi River Mining, Bamburi, East African Portland Cement, now that the market has had time to digest that?
Well, remember, we were in a bear run, and looking at the cement sector, Bamburi Cement had this very public spat with the National Social Security Fund, where the managing trustee threatened to dump his stake of 12% onto what was a very weak market. So that was a special situation there. That price is beginning to recover out of that sell-off. Athi River Mining surged yesterday about 6.5% on good volume. And if I was playing in the cement sector in this region, for now, I would really pick Athi River Mining. They tend to execute right on plan. They've really scaled up the capacity at the right time in the entire region. And I think after coming off its 52-week all-time high at 195, it looks good value around 160, 165 to me. Portland has not reacted, and bear in mind it has this very large yen loan, so it has a tremendous exposure, and it creates a lot of noise depending upon that yen-Kenya shilling exchange rate.
Just looking at some of the other benefactors, something like East African Cables, for example, what do you see as being the investment merit in a more downstream benefactor like this at the moment?
Well, that's an excellent point. And East African Cables released results which were about minus 50% about 3 or 4 weeks ago compared to the previous year, and the share price promptly rallied about 30%. And I think that reaction was exactly because of what you're asking about. People can see that near term such a business had a few problems last year, particularly in its Tanzanian business, but they've cleaned that up. And I think there's a lot of growth coming in an organization such as Cables if they play the cards right.
So at 14 shillings 90, would you be a buyer?
I'm definitely looking at it. Volumes are very thin down here, but I think it offers some good value at this price.
In the meantime, you touched on the power sector as well. KPLC continues to attract a significant activity ahead of its book closure this week. That on the back of a 0.35 shilling dividend. With this counter trading ex-dividend, your position on it?
I think, it's pretty well supported here. It's cheap on a PE basis. It's all about execution now. I'd look at it if it slipped a little bit more down to sort of with a 19 handle. But it is a value stock at the Nairobi Stock Exchange. The PE is about 6. And really, we have the ability to pay. We just want to be connected. And essentially, that's what their business plan is all about. It's about accelerating connection points all across the country. And they have the capital to do that. So I think, that's something to put away for about 18 months.
Just your outlook for the trading day ahead, Aly Khan. We had yesterday being highlighted that it's foreign investors buying into underpriced stocks that's starting to rear its head once more.
Well, I think, we're trying to build a base. It's very tentative. We've had 2 up days after a very poor bear run, which saw us fall 16%. The market is deeply oversold. There's plenty of value now in some of these counters. We've got lots of single-digit PEs. And I think this is the time to step up and pick up stuff which looks extremely cheap. Kenya Airways, KCB, Kenol Kobil at a P of 7.75. Those look to me like outstanding picks for the next 6 months.